I'm Jatin Narang, CEO of Verito. This is Firm Ground, a show for tax preparers and accountants who need to understand security, compliance, and the tools reshaping our industry. Let's get into it. 3 months ago, a sole practitioner in Ohio pasted a client's full Schedule C into ChatGPT. He wanted to write a tax planning letter. It took him 30 seconds, and AI wrote a great letter. But with that client's gross revenue, business expense, social security number, home address, everything became part of ChatGPT's data set. He didn't know, client didn't know, nobody consented to anything. And it's not a hypothetical anymore. It's happening with thousands of firms across the nation. Not because people are careless, but because nobody told them the rules. Today, we're gonna fix that. In the next 13 minutes, I'll walk you through all the AI tools that matter the most for your firm, where the compliance lines are, and how to make the best use of these tools without putting your clients and your firm at risk. According to IBM's 2025 Cost of Data Breach Report, any breach involving unauthorized use of AI cost upwards of $4.63 million. That's $670,000 more than a standard breach. And it all starts with somebody pasting data into a chatbot. All right, 3 tools you need to understand. But first, some context, because this industry has been a soap opera lately. Tool number 1, ChatGPT. By now, I'm sure almost all of you have heard about ChatGPT, Sam Altman, OpenAI. If you follow any of the news, you know Elon Musk co-founded it back in 2015. He put even $38 million of his personal money in it. And then he left. Then he sued Sam Altman, claiming that the company has deviated from its original mission when it went for profit. And that lawsuit is headed for a trial right now. Meanwhile, OpenAI just raised $122 billion, putting it at a staggering valuation of $852 billion. They have more than 900 million active weekly users. It's the most widely used AI tools on the planet. That's your tool number 1. Tool number 2, Claude by Anthropic. If you haven't heard about Anthropic, you're about to. It was started by 2 ex-OpenAI executives who left over safety concerns, and it blew up in recent weeks like nobody expected it to. Here's what happened. They had a contract with Pentagon, and Pentagon wanted to use this on classified networks. Anthropic said no. They denied any involvement into mass surveillance of Americans or any autonomous tools where there is no human oversight. The government didn't like that. President Trump even went to Truth Social and called them left-wing nut jobs. They lost the contract on February 28. Hours later, OpenAI announced they'll pick up the contract instead. The public response was immediate. ChatGPT uninstalls grew by 700%. 1-star negative reviews grew by 400%. Meanwhile, Claude was the #1 app on the App Store for the first time ever. Anthropic said they grew 60% more new users just in a week, and paid users doubled. Turns out, Americans don't really want their chatbot working with Department of Defense. Now, I'm not here to take political sides. I'm here to talk about your data. And that whole episode sets the most important point of this presentation around data security. Because the question isn't which tool is better for politics. The question is what happens to your data depending on the tool and the tier you and your staff are using. That's where things get interesting for tax and accounting firms. The third tool is QuickBooks AI integration. Intuit and Anthropic announced a formal partnership back in February. They'll be using MCP Server across Credit Karma, QuickBooks, MailChimp, and TurboTax. We'll get deep into why that matters to you specifically later in the video. So that's the landscape. Now let's talk about what that means for you specifically. Because if you're handling taxpayer data, you're not an end user of AI tools, you're regulated professionals, but these tools don't know the difference. I'm gonna keep this section tight because you already live these rules. You don't need me to tell you what a WISP is, but I do need to connect the dots between the rules you already know and the tools we just spoke about. Your WISP is supposed to cover every system that touches your data. That's every system out there. So if somebody in your firm pastes client data into Claude or ChatGPT, that tool becomes part of your data ecosystem. Is it in your WISP? Do you have a documented procedure on how your staff should be using AI? If not, then there is a gap. And IRS doesn't need to access your server to test that. They just need to ask you for your WISP. Then there's the FTC Safeguards Rule. This one still catches a lot of small firms off guard. FTC Safeguards Rule apply to every firm that handles consumer financial data. That's you. And fines start at $50,000 per violation. Here's the part that matters today. Whenever you're using a third-party tool to handle client data, that tool is a vendor. So do you have a vendor management policy that includes AI? Then there's GLBA. GLBA is the umbrella framework that even covers FTC Safeguards Rule. And they start at $10,000 per violation per person. That's a personal fine, not for your firm. So that's the legal landscape around these tools. Now let's talk about what really happens when somebody in your firms hits send on these tools. And that will change the way you think about AI tools. Let's talk about ChatGPT's default problem. If you have a free or a plus ChatGPT account, your conversations are used to train the model by default. Let me say that again. Everything you type becomes part of training their model. You can opt out, go to Settings, Data Controls, and toggle off Improve the model for everyone. But you have to do that manually. For every user, they have to do that independently on their own account. Now, their enterprise and API accounts are different, but let's be honest, who in your firm is using API account? Every staff member you have is using ChatGPT on their phone during lunch using their free account. That's where the risk lives. And if you think this is all theoretical, ask Samsung. In 2023, Samsung's employees pasted confidential semiconductor data and their personal meeting notes into ChatGPT in 3 separate incidents. So all of their confidential semiconductor data became part of ChatGPT's training program. And arguably, the data that you're handling is more sensitive than Samsung's source code. Next up is Claude and their account to your problem. And this is where the Pentagon story connects to your practice. You remember all those users who jumped ship from ChatGPT to Claude over security concerns? How their users tripled? How it became the #1 on App Store? It's awesome for Anthropic, but this is where the details matter for all the users that moved over. So their commercial products by default do not use any of their data to train their models. The API logs only retain for 7 days. That's strong. For the consumer products, it changed in 2025. Users now have to choose whether they would allow Anthropic to use their data for training models. You can opt in, and if you do, they can retain your data for up to 5 years. And that toggle, that opt-in toggle, you guessed it, that's turned on by default. So all the millions of users that switched from ChatGPT to Claude, if they did not read the fine print and clicked on accept, their data is being used by the model by default for next 5 years. The irony is hard to miss. Now let's talk about the 77% problem. Now, this isn't just a headline risk. Research from LayerX shows 77% of the corporate employees have pasted corporate data into AI tools, and 82% of those pasted events came from personal, unmanaged accounts. Your staff is doing this right now. The question is whether you've given them the security guardrails before somebody makes the Samsung mistake with the client's social security number. In the end, if you're using AI with client data, what really matters is which tier of these tools you're using more than the tool itself. Consumer accounts of any of these tools are a compliance risk, period. So everything I've talked about so far involves somebody manually pasting the data into a chatbot. That's one client at a time, one conversation at a time. But what I'm about to show you is entirely different, and nobody in the industry is talking about it yet, which is MCP. MCP stands for Model Context Protocol. Think of it as a universal adapter that lets AI tools connect directly to your business software. No data copying, no pasting. AI tool can read the source directly. Intuit announced online integration with QuickBooks using MCP, which gives AI tools direct access to your QuickBooks data. That involves invoices, bills, book of payments, and your entire financial data set. Now, there's a clear distinction between one client versus your entire practice. Because when somebody pastes a client Schedule C into ChatGPT, that's bad, but that's just one client, limited and manual. But when somebody connects QuickBooks directly to AI through MCP, it gives AI access to everything in your QuickBooks data. every client, every transaction, every invoice, all at once. The exposure isn't one conversation, it's your entire practice. Here's the part that keeps me up at night, and it goes directly back to the account tier problem that we just covered. So someone in your firm connects QuickBooks to their personal Claude account, not a commercial one, and they ask, show me all the overdue invoices from Q3. They ask all the follow-up questions, discuss specific numbers, specific clients. It starts as a conversation. Now, Anthropic says raw data from the MCP connector isn't directly included in the training. That's true, but the conversation itself, where Claude referenced client files, specific numbers, particular invoices, is in fact part of the training if it is enabled on your account. And imagine all of that data sitting in the training pipeline for up to 5 years. Now that's a backdoor, and most people don't even realize that's open. Security researchers have flagged additional issues. These integrations typically require broad access. That means you cannot restrict them to a particular client, invoices, journal entries, or firms. It gets to see everything that your QuickBooks has. There's no role-based access. That means whether you're an intern or a managing partner, you get same level of data exposure. And audit trails are thin. If AI reads the entire history of your client's financial data, where's the log? Intuit calls it early preview. That means powerful, but not really production ready for regulated firms. So where does that leave you? Let's start building a framework that you can actually use starting this week. I'll spend 10 minutes showing what can go wrong. Now let's talk about what you can do right, because AI isn't going away. And the firms that will use AI compliantly would have a real advantage. And the ones that don't would either fall behind or be non-secure. Here's what's safe to do with AI. Drafting client letters, using anonymized or redacted data, doing tax code interpretation or tax research. Asking AI about regulations and not really about client data. You can utilize it to do employee training materials, marketing content, or even templates. These are low-risk AI use cases that can actually save you time without touching compliance wires. What does require enterprise controls? Anything involving client data that could be social security number, names, specific financial figure. It needs a commercial API tier plan with documented security policies. So reviewing and summarizing client data stays in the secure environment. And anything client-facing requires human review process before anything goes out of the door. And here's what you should not be doing yet. Do not connect QuickBooks or your practice management tool directly to AI without a formal security assessment. Don't let your staff use personal AI tools with anything that is work-related. Do not use any of the consumer AI tools in your office at all related to client data. I don't care how good the tool is. It's the tier that determines your risk, not really the brand name. Now here's the 5-step guardrail checklist. Number 1, update your WISP to include AI usage policies. If AI isn't part of your WISP, you're already behind. Number 2, create an approved tool list. You gotta document which AI tool your firm would be using, which tier. It should all be documented. Number 3, create access controls. Who would be using AI tools? With which data? Under what circumstances? Write it all down. Number 4, train your staff. Not a one-time email, but an ongoing training that tells them what they can and can't put into AI. Remember, 77% of users are still doing it. Number 5, document everything. AI usage policies, vendor assessments, security incident report, employee training. Everything should be in the written documentation. Because when auditor asks you about it, you gotta show them paper. This is where we come in, and I'll be pretty straightforward about it. Everything that I walked you through requires work, whether it is updating your WISP, drafting vendor management policies, employee training. Most of the firms don't have an IT and compliance team to take care of that. That is literally why Verito exists. We take care of your IT and compliance so that you can focus on your clients. We are not an AI company, but we are the security and compliance layer that makes AI and everything else you use safe for work. Your WISP needs updating to cover AI? That's Verito Shield. We deliver audit-ready WISP within 5 business days for $499 one time, and it covers AI usage policies. You need secure infrastructure? Verito Space provides private server hosting, that is compliant with IRS Publication 4557, GLBA, and FTC Safeguards Rule out of the box. Data isolation built right in. You don't have an IT team? That's VeriGuard. Complete IT and compliance management, including endpoint security, backups, password management, employee training, everything that FTC requires. One vendor, one bill. We've maintained 100% uptime since 2016 and sub 60-second support response time. We have over 1,000 firms that trust us with their data and infrastructure. These numbers speak for itself because we created for compliance first, performance follows. AI tools are going to reshape accounting. That's not the question. The question is whether your firm adopts them compliantly or become a cautionary tale. The firms that get this right would be faster, more efficient, more competitive. The firms that don't would face IRS fines, FTC scrutiny, and lose client trust that can never be regained. You don't have to figure all of this out alone. Start with your WISP. Start documenting all the policies. And if you need help preparing the compliant infrastructure, that's what we do. Thank you for your time. Stay safe, stay blessed.